welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators and the candlestick patterns on Nifty and Bank Nifty. Now first of all, let us discuss what we have mentioned in our last video. Due to the monthly expiry, we have mentioned in our last video that market might not go anywhere because on weekly basis, I mean to say prior to last week, it was an indecisive candle on the Nifty weekly charts, and until and unless that particular range on the upside or downside is not breached, market might not find any direction and market might move in this particular range. So throughout the week, on the basis of on the back of monthly expiry, market remained in a huge range. It went down, then again it rallied. Again, selling was seen at the higher levels. It corrected, then buying was witnessed at the lower levels. Again, it corrected. So almost market behaved on our expected lines. So now looking at that particular Friday's closing, now let us see, and we'll try to figure out what could be the trend for the next week on the index analysis. Now let me show you the Nifty daily charts. Now this is the Nifty daily chart. This was Friday's candle. Now that this was the Monday. So market remained, it went down, it again went up, again it came down, it went up, again it came down. This was the range of the market for the last week as we have expected because of the monthly expiry. But most important thing is this particular circle area. This is the congestion range. In the last 10 trading sessions, Nifty has not given any particular directional trend. It has been moving or it has been stuck in this particular congestion range. So let me show you clearly on the weekly charts. So we will have a clear view about that thing. These two are the weekly candles. This green candle is of last week, and this indecisive candle is of previous week. I mean to say before the last week. So until and unless, and if we look at this particular two candles, it is an inside week formation. This was 18th April closing, and this is 25th April closing. So particularly if we combine this particular two candles, it is called as an inside week closing. So the directional, I mean to say the trend deciding level for the Nifty is 17,415 on the upside, and on the downside 16,824 would be the directional the trend deciding level on the downside. Until and unless Nifty doesn't break the either side of level, either 17,415 or 16,824, it might remain in this particular congestion trend. It might behave in similar manner of the last 10 trading days. Now the important thing which I would like to share is next week on the 3rd and the 4th we have the Fed meeting. I mean to say the American Federal Reserve meeting is going to be conducted, and the Fed will take decision on whether to how to tap or how to control the inflation. Either they are going to raise interest rate 50 basis point, which is the market is expecting, or they might go for quantitative tightening. So because of this major event, Nifty might again behave wild for the next week also. So we are expecting similar kind of pattern. It would be a highly volatile week, at least till next expiry. So the trend deciding levels, as I discussed, would be 17,415 on the upside and 16,825 or 24 on the downside. So we feel that Nifty might trade in this particular range for the next week, and until unless we don't see any breakout on the either side, either on the upside or the downside, Nifty might behave in this particular manner for the coming week. But looking at this particular pattern, we feel that the strategy for next week would be buy on dips. If there is any kind of dip, buy, wait for pullback, and then just try to book profits. Do not try to play for huge swings. Just try to play for I mean to say a 1% move on the Nifty on the either side. If you go long, if you buy, if you get 1% or at least half a percent, just try to book profits. Again at the higher levels, when there is major resistance, go short, wait for some correction, 100 points in Nifty, book profits. Do not try to play for 200 points, 300 points, 400 points swing trade in the Nifty. Now let us come to the important supports and resistance level for the Nifty for the next week. The important support in the Nifty for the next week is placed at 16,958 is the first support. Second support in the Nifty is placed at 16,824, and third support in the Nifty is placed at 16,761. Whereas on the upside, the first resistance is placed at 17,257. Then second resistance is placed at 17,417, and third resistance is placed at 17,666. So these are the important supports and resistance level in the Nifty. Traders are suggested to watch out for this level and trade accordingly in the direction of the intraday trend of the market. And as I discussed, we will not see any directional trend at least for the next week, but market might behave in this particular manner. So just try to play for small moves. Now let us come to the Bank Nifty. Let us see what we have observed in the Bank Nifty daily charts. Now this is the Bank Nifty daily charts. Let me draw a parallel channel so that we can have a clear view what is the trend or what was the trend for the last couple of 2 weeks. Again in Bank Nifty also, Bank Nifty has stuck in this particular range for the last 10 trading sessions. So for Bank Nifty, the trend deciding level would be 37,123 on the upside, and on the downside, the low of this particular candle, which is 35,511. So until and unless this range is not breached on the either side, either on the upside or downside, Bank Nifty might also behave in the similar manner. I mean to say, it would be a zigzag movement. It would be a very frustrating move, and it is going to be a difficult week for the traders for the next week. So let us discuss what would be the support and resistance levels for the Bank Nifty for the next week. The first support in the Bank Nifty is placed at 35,747. Then second support is placed at 35,511, and third support is placed at 34,706. On the upside, the first resistance is placed at 36,336. Above that, the second resistance is placed at 36,719, and third resistance is placed at 37,123. So these are the important supports and resistance level in Bank Nifty. Traders are again suggested to follow this or try to just look out for this particular supports and resistance and trade in the direction of the market trend. So now let us come to our third segment of our show, which is option analysis. In option analysis, we'll try to identify where there is a rise in the open interest, what is the implied volatility, and where the smart money has tried to build up their particular positions. So we will try to figure out what could be a trend according to the option analysis. So now let us discuss what we have observed in Nifty calls. You will see on the screen, in Nifty calls, you can clearly see that there has been a rise in the open interest here in 17,200 calls, then 17,300 calls, 17,400 calls, and 17,500 calls. This is the rise in the open interest. Now here again, implied volatility is just into a comfort zone. It is just between 15.14 to 15.83. On the back of the fag end selling on the Friday, what we have seen, there was a sharp selling on Friday in the last 1 hour. Because of that, we have seen a significant drop in this option premium. So the as I said, the smart money might be waiting for a particular trigger from the federal bank's statement on third and the fourth. So they might be witnessing that markets might not go beyond 17,500 on the upside. So that is the reason why we have seen the drop in the option premium, again in the rise in the open interest. You can see this particular rise in the volumes also. This is are also on high. So maybe 17,500 could be the cap on the upside for the next week. uh, so this is the Nifty call option. Now let us try to figure out what we have observed in Nifty puts. In Nifty puts, you can see the action was seen in 17,000 puts, then 16,900 puts, then 16,800 puts, then 16,700 puts. Now here there is, you can clearly see the rise in the open interest. Volumes are also into a comfort zone. Implied volatility is slightly rising. It is just between 18.8 to 19.43. And here also what we can see that the rise in the option premium is not that much comfortable. So we might see that on Friday we have seen that Nifty was trading very strong till the second half, maybe till 2 p.m. And then afterwards, after 2:15 to 2:30, we have seen a sharp sell-off. So that is the reason why we might have seen some sort of profit booking coming in the into the markets, and smart money might have started buying some Nifty put. So that is the reason why we have seen a slightly rise in the open interest of this Nifty put and the rise in the open interest. So we feel that again, as I said that markets might be waiting for some triggers from the Fed meeting or Fed statement from the Fed chairman. So market might remain in a very uh, tough range, and it would be a very difficult for traders to particular catch this particular move at least till next week expiry. Now let us discuss what we observed in Bank Nifty calls. In Bank Nifty calls, you can clearly see again there has been a rise in the open interest in 36,500 calls, 37,000 calls, and 37,500 calls. This is the rise in the open interest. Volumes are also on the high. Implied volatility is between 17.59 to 19.43. But as I said, that on Friday after 2:15 p.m. we have seen a sharp drop in the markets where Nifty and Bank Nifty both were hammered down very sharply. That is the reason why we have seen a significant drop in this particular Bank Nifty option premium at the money also and out of the money also. So that is the reason why we have seen rise in the open interest and a sharp decline in the option premiums, which clearly indicates that the smart money might be thinking that Bank Nifty might feel or might witness a strong resistance around 37,000 on the upside. So now let us discuss what we observed in Bank Nifty puts. In Bank Nifty puts, the action was seen in 35,500 puts, then 35,000 puts, and 34,500 puts. Now here also you can see there has been the rise in the open interest. The rise is not that much higher, but yes, the open interest is rising. The volume is also rising. There has been the rise in the option premiums. Here the most important part thing is implied volatility. Implied volatility is also rising. It is between 23.38 to 25.83. Now, as I said, that on Friday after 2:15 p.m. we have seen a sharp drop in the markets. So because of that, the smart money might have started buying Bank Nifty puts. So that is the reason why we have seen a small rise in this Bank Nifty puts. I mean to say out of the money puts. So looking at to the overall chart patterns, option analysis of Nifty and Bank Nifty, we feel that market might remain range bound. It would be highly volatile because market might be waiting for a statement from the Fed chairman on third and the fourth. So that is the reason why we might see Bank Nifty and Nifty moving in this particular range. It might be again moving this way. It would be very difficult to trade for the traders. I would suggest traders not to trade for huge swings. Just try to play 100 and 150 points in Nifty, and maybe 200 to 250 points in Bank Nifty. Just try to play in this particular small point range in Nifty and Bank Nifty, either long or short. But overall, our strategy would be buy on dips. or you can say that buy on supports and sell on resistance. This could be the strategy. So now let us come to the final segment for show, which is positional call. I've identified one stock. The name of the stock is Endurance Technology. Now this is the stock. Endurance Technology has corrected significantly from the levels of almost 2000, and it has taken a pause around uh, 1077. So almost we can say that the stock has corrected 50% from its lifetime high. Now you see this. This is the overall chart of Endurance Technology from the listing days. Now here you can see this is the support line, and uh, this support was resistance or congestion in previous trend. Now it has become a strong support from this particular levels. So now let me show you what kind of pattern it has formed after correcting 50% of its lifetime high. It has formed a congestion range. It has tried to given a breakout about this particular range, and the volumes are also rising. Now this is a classical formation of a bottom in Endurance Technology. Now you can clearly see after 50% correction from its lifetime high, the stock has been consolidating. The volume you see here, the volume has been dried up in this particular range. The volume has been dried up in this particular range, but after making bottom, the volumes are rising, and the price is not going anywhere. It is into a consolidation phase. It is clearly indicating that stock is making bottom. Now here you see, you can see it has formed a triple bottom, and the previous bottom was not breached, and RSI is making higher tops, higher bottom. It is a classical example of positive divergence in the stock. uh, Long-term investors should have this particular or should buy this stock Endurance Technology for long-term investment from these levels. The stock is bottoming out, or it is on a verge of a breakout. Any corrections should be used as a buying opportunity. Even if it is trading at these levels, even one can buy at 1219 odd levels. So I would suggest traders to buy in the range of 1290 to 1180 on the downside for an upside target of 1585. We are expecting this particular congestion range to be tested in long run. So almost 1580 to 1600 could be the target for next 10 to 12 months. So definitely after a correction of 50, almost 50% on in the stock is turning around. I mean to say turning positive. It is consolidating. The volumes are rising. RSI is showing positive divergence. So long-term investors can accumulate the stock in the range of 1219 to 1180 for long-term target of 1585 to 1600. So thank you very much, friends, for watching the show. Any suggestion you can give into comments box. And have a nice trading week.